Welcome back to HFO Multifamily Marketwatch, your trusted source for information for apartment owners and investors. Multifamily Marketwatch is presented by Pacific Exteriors Northwest, a contractor specializing in siding and exterior envelopes and delivering exceptional quality and service for over 30 years. And by Gantry Incorporated, the nation's largest independent mortgage banking firm.
Welcome back to HFO Multifamily Market Watch. I'm Greg Frick, partner at HFO Investment Real Estate. Today we have with us Jack Stevens, one of our partners. Jack, thanks for coming to chat with our audience. I thought we'd just talk a little bit about, we're just coming into the new year, 2025, the election's over. Talk a little bit about the market and kind of enlighten our audience of what our predictions are and what's going on.
Yeah, well, I mean, if anything we've learned in the last few months, predictions are a little bit more difficult to make than we thought they might be. But,
definitely.
And kind of pitching back to that, I wanted to get a little bit of insight on your end. Obviously, I've been in the market for about 11 years. It's been kind of nothing but sunshine and roses other than the last few years, but haven't experienced a true rebound from things. Early in my career as an analyst, saw it a little bit, but not really in the trenches. And so I'm kind of curious, obviously, we've seen Portland itself get hit the hardest, Multnomah County specifically. Some of the tertiary stuff is still being okay. Is that similar or different than the last go around in 2008?
Coming out of the Great Recession, I mean, I think, that was a little bit different because it was a credit freeze that started right away. And so this one seems, well, we had a couple of things. We had COVID, we had the higher interest rates, and it seemed to just drag on a little longer, whereas in, 08, 09, multifamily was last to get into it. I remember talking to people in the other disciplines, and they were saying, hey, summer of 08, this is going to happen. And we were still doing transactions up through, I think we did the last Washington Mutual Chase loan. I think it was in January, February of 09.
Okay.
Office, industrial were already telling us, hey, there's no credit. And then it just stopped. I mean, literally it stopped. There was no transactions. There was just nobody knew about lending, and it was just a credit freeze. And then it slowly started coming back, and it came back similar to this, came back on the institutional side first.
Right.
Institutional capital came first. There was also, if you remember back then, we still had that immigration coming in, and Portland was still the it thing.
The Portlandia.
This was a national, recession nationally, but Portland was still, people were still coming here. Yeah, I don't have a job in, the East Coast. I'll go to Portland. And so we saw a big recovery, and it took about 3.5 years to get back to transaction volume. But again, it was institutional that led first.
Right.
This one seems like it's dragged on longer. And there was the exception, I'm going to wait for rates to come down. I'm going to wait for rates to come down. And you've heard that, and you and I have talked about this before. Last year there was a lot of, okay, you're not seeing where you want to be, but are you going to try to time rates? And now I think this year it'll be interesting to see, hey, maybe they go down a little, maybe they go up. Who knows? If you and I knew what interest rates were going to do, we probably wouldn't be sitting here.
Right.
But, now do we see, owners kind of saying this is the lay of the land, let's make decisions. So I think it's this one's been dragged out a lot further.
Yeah, no, that makes sense. That's definitely what it seems to be like, although we are seeing the institutional capital at least quasi come back, not fully, but at the end of the day, they need to make deals happen to do anything. And so, on the private client side, did you see, was it like a 6 month or a year delay to getting back, or what was kind of?
It was. I mean, there was no transactions literally for 9 to 12 months, and then it just took a long time. You had, and the same thing we're seeing now, when you don't have a lot of local banks, regional banks. On the private client side, not everybody wants to go Freddie and Fannie. And I think if we looked at our transaction volume last year, I think 70% of the deals were agency debt.
Right.
When you're doing a $5 million transaction, $3 million loan, they're used to doing a community bank. Maybe they do agency, maybe they don't. So until we get some banks back, I think that was, that's what helped. And back then it was institutional capital coming first, kind of leading the way. And then the private client side was still, very worried about liquidity, worried about, a little bit more risk averse, and so it just took them a while to come back. Funny thing is, back then though, was the market was going gangbusters from an operations standpoint. There was construction coming finally, rents were going up, and immigration was going crazy. So there was a lot of signs like, hey, you're gonna miss this wagon if you don't get on it. This one's a little bit different. There's questions about what kind of job growth are we going to see, positive immigration. So there's a little bit more of a hesitation, other than there's no supply.
Right. It's almost the exact opposite. Exactly. There's no supply, expenses are up, and there's less in migration.
Right.
Though we are still the cheapest option on the West Coast, we're not seeing it into Portland itself. I mean, you just have to go north 15 minutes, and you see kind of what Vancouver's doing and all of that. It's funny, actually. this last weekend, it was obviously raining. I was trying to go do something with my daughters and was looking up, best libraries to go to and best this and that. And pretty much to a T, everything was in Vancouver. So
Yeah.
it's very
So
interesting to see two metros so close together being so
that are
different.
so separately, yes.
Right.
And then historically in Pacific Northwest, well, Portland, you'll see recoveries even like in the 90s and the 80s. A lot of it was Washington County for jobs, Intel, Nike. Coming out of the Great Recession, it was really centered in Portland. Portland was where the city of Portland had job growth within the city of Portland. Average income went up in the city of Portland. This recovery is probably more in line with what we typically see, where it's going to be, other than Clark County's taken an inordinate amount, but it's more suburban. And then again, I think nationally, what we do with some of these business districts and cores will be interesting. We're a little bit unique in that in terms we don't have a lot of housing.
Right.
We're not intermixed, so it's very specific, businesses and offices with some service around there. How does that change? Does that make us a little slower to come back on the downtown side? But you brought it up. I mean, we still have, the weather, the recreation, and things like that. So, and we're still the cheapest, so people will still come. It's just my big concern has been it's not about tents and homelessness now. It's about economic job growth and what do we do on that?
Right, because it does seem like that has gotten a lot better for sure.
Yes.
And that's one of the other interesting things that I think is really flying under the radar is that we completely changed our form of government.
Yes.
There's many more city councilors. I don't know if I've met a single person who fully understands the inner workings of how it all shakes out.
I don't even know if the city council people
It doesn't
know.
seem like
Right.
they do, which, I mean, I don't know if that's a detriment to them or not, but just kind of curious if you've heard any rumblings about, what people really want to do. Because I remember reading the ballot, or not the ballot, but the voters pamphlet it was almost comical because you read every single person. They were literally all the exact same. You want to fix the homelessness issues. You want to make housing more affordable. You want to bring people back downtown, on and on and on. But there weren't any mechanisms of how people want to do that. And so has there been anything out of city, or are they still just trying to figure out?
Well, I mean, the mayor came
operate?
out, it was a one issue mayor came in with just, I'm going to get people off the streets. I'm going to do it within, I think it's at the end of the year. And, they have done some supportive shelters that have opened and beds like that. I think in city council, it'll be interesting. The dynamic with now 12, how do people form coalitions? And, are you able to get things through? And again, you got to remember now, city council's now by district. So you have 4 districts, 3 people in each district. And as we were interviewing some of them, before they even took office back in January and December. And I was asking, as a district, do you and your 2 counterparts go together? I mean, what if you're, diabolically on the opposite side of an issue? How do you do
Which
that?
many of them are, I'm sure.
Exactly. And so they didn't know. They were actually, I think, taking a class on how it's all going to work. So it's going to be, I think, my concern is, are we going to have a couple years of inactivity because people don't know how to maneuver within this city council thing? I mean, I guess the good thing, I think there is a recognition from elected officials that things have to change. As you said, it's tents, homelessness is a big issue. That's where everybody's going. But I think the underlying current is economically, we're at a disadvantage. Are we a place that affords opportunity for people? How do you change that narrative to get, younger people coming here for jobs? And I think recognizing that now, is there political will to get that done? Who knows? We'll see. But that's, I think that's where it's going to be really interesting in the next couple of years. What are the mechanisms we do to do that?
Right. Well, it's going to be interesting to see too, because I haven't heard any talk about rolling taxes back or rolling services back in any way to save money or lower tax rates to bring jobs in. But I have seen a pushback from voters with regards to, we don't want an increase in the taxes for this. We're seeing it not working. Where is this money really going? And there just seems to be more accountability there.
Well, there's definitely a quest for more accountability. There's definitely we've been paying all this sight unseen, so to speak. Now, what are we really getting for it? They're trying, Metro, which is Clackamas, Multnomah, and Washington County. They're trying to gauge, is it doable to ask for the supportive housing measure, which is 1%?
Mm-hmm.
Do they want to extend it to 2050? It was only supposed to be a 10-year program. Extend it out for 2050 and reduce the rate from 1% to 0.75.
Right.
We had a meeting with Metro with some business leaders and said, I don't know if there's appetite there. And I think they're concerned about that. They were going to put it on the ballot this spring. Now it looks like they're maybe trying to put it in November. I think they're concerned about, do they go to the ballot and lose? What's that look like? I know Portland Public Schools is also going that same dilemma. Do we put on another ballot for, redoing the schools and what do you, because I think you're right. I think the public has said, hey, wait a minute. We're not against paying taxes. It's just we've been paying and what are we getting for it?
Yeah, when you get articles about the school remodel being the most expensive school in the entire country, it starts to push back a little bit. Throughout this, we've had a lot of people, and, I think we've fallen into this trap too, where they say, hey, when do I go? And, a lot of last year was wait until kind of February 25. The election will be shaken out. We'll just kind of know more where we're at. I think it's pretty clear we still don't fully know where we're at with a lot of various things going on. And so, if someone asks you right now, and obviously we try to avoid predicting the future, but, I want to sell. Do I go now? Do I wait? What are the various factors that they should weigh into that decision?
Well, I think we'll look back, and I think we're going to say last year, 23, part of 24 was maybe the bottom in terms of valuations. Timing, trying to time the market's always tough. I think, as you said, we had a lot of groups thinking, oh, I'm going to wait. If you wait for rates to go down or you wait for the market to get hot, then you've got more competition, and there's that play there. So I think it's kind of unique for each person are you on the sell side or the buy side, what you're going to do and looking at opportunity. I mean, I think there's still opportunity here. We're still immigration's turned around. We're not negative immigration. We're seeing, coming here. You've seen a lot of growth in the suburban market. I think a lot what I've seen, and especially in our world, in some of the private clients that have owned for a long time, and it's now that's the estate plan question. What is my, do I want to be in this for another 10, 15 years? What do I do? Some of the older assets, do we have the mechanism, or do us and our partners want to put a bunch of capital in, or is this the opportune time to get out? I think there is now the feeling that, rates, like you said, may come down a little bit, but I don't think we're going to see rates in the 3% anymore. I mean, I think those are over.
It doesn't seem like it.
Right.
No, that makes sense. And then the other big thing we're seeing, obviously, is insurance has skyrocketed.
Yes.
The LA stuff that happened obviously isn't going to help, but does Portland have an opportunity to position itself as one of the lower risk states? Now, I know we have a lot of wildfires throughout the state, but in terms of the Portland metro, other than the earthquake, which is obviously a big deal, but kind of a more macro thing, we are a lot safer than your Floridas, your Texases, a lot of things in the South, tornadoes, whatever it may be. And so do we have some sort of comparative advantage? Have you seen rates in other places skyrocket? I know you don't necessarily.
Well, Texas definitely went through the roof. Texas rates, California, Florida, the same deal.
I think even cover there.
Exactly. Or it's such a, you're doing not substandard, a third party insurance carrier. So the rates are through. I think one thing people forget here is, our property taxes. We don't have runaway property taxes.
Right.
And it's not reassessed on sale. So I think that's an economic advantage that, people don't really realize that until they do the underwriting and they call and ask you and go, okay, I'm buying this property. What are my taxes going to do the next year? And it's not going to reassess on the sale price. There's going to be a nominal increase.
So half the time the Californians don't even believe you. When you say that,
right. We've got to show them and have them talk to somebody. So I think that there's an advantage there. The insurance thing, you just kind of hope that there's going to be there's got to be something, because it's unsustainable to have these kind of increases. Either they're going to have to change the policies. I was with somebody yesterday talking about limiting the water damage coverage. But to do that, technically, you need to go talk to your lender, because the lender has requirements on what they want for insurance. So, I think there's going to have to be something federally and probably maybe even regional that, okay, hey, if you're going to loan on, single family, any kind of commercial property, there's going to be an understanding that this might be the coverage and the ability to push your deductible up.
Yeah, no, that makes sense. Or remedy the situation. Because we have pieces of buildings built in 1970, and it's okay if I replace the plumbing and the electrical. Am I good? You treat me like a 90s building, and it's always been maybe do it and then see, which is obviously a tough pill to swallow when you're going to spend that much money and invest in it.
And then the concern is you do now I get a policy today, is it going to be there tomorrow?
Yeah, not
tomorrow. I mean, like on the renewal, what do I do? And so I'm hoping that there's some, I don't want to say legislation change, but some kind of change on the policies that we can put in place. So
yeah, clarified a little bit. That makes sense. So aside from all that, let's transition into what we do. Obviously, it's transactions and sales volume. We get more calls from appraisers than we ever have because there's less deal points. They want to ask our opinion on things. So what have you seen with volume over the last few years?
We hit a high water mark. 21, 22 were the high water marks in this market. I mean, we may not come back to the dollar volume that we hit there in 21, and we went over $4 billion. It may be a while. I mean, you're going to get there eventually just because of appreciation on pricing. We typically are normally in the 200 to 250 Portland Metro in sales. In 23, we were under 100 complexes sold. 24, we're slightly above that. I think it's going to factor out. There were some closings fourth quarter. We'll be in the 117. Again, this is like 5 units and up. I think we're slowly going to come back. As I mentioned before, it took about 3 years to get back to the transaction volume of number of transactions that we had pre 2008 and 9. It took about 3 years to get back there. So I think we'll be on a pattern slowly kind of going back. As we get, more, as institutional capital comes in, some private client turnovers. I think COVID has accelerated some people's life decisions. So I think you may see more of kind of estate planning, selling of those things. So I think it's going to come back. It's just going to take time. I mean, cap rates have adjusted, not as much as we thought they would, but yeah.
Yeah. So in terms of 21 and 22,
Uh-huh.
5 years after that, you're looking at 26 and 27.
Yep.
Is that where the majority of the debt came in, or more people putting 7 and 10 year debt? Obviously, looking back, that would have been great.
Right.
But how is that going to boost sales in terms of necessity, or people having to put money into refi?
Well, we had a lot of deals 21, 22 that were on shorter term, bridge, 3-year bridge
Right.
loans. We're going to go into an add value play. Some of those have been extended. Some have refinanced those out. So I think there was a sense, I mean, we talked about this before. We thought in 24 we would see more, maybe lender push sales. Maybe they don't know, but they're pushing it. They've kind of extended those out. Now the question will be, I think at some point they're going to say, hey, it is what it is. Or as an owner, I was hoping that the rates would go down and I could take advantage. It's not, so I need to make a plan. So I think that'll drive actually some transactions that we would have thought would have happened in 24 gets pushed into 25 because lenders are going to want them off their book. They're going to want some kind of work through or figure out what to do here. And I think you'll have limited partners that say, hey, I was only planning on being in this thing for 4 or 5 years. Now you're telling me we're not going to get as much of our equity out if we're going to get any, and I've got to sign on a new loan, and we're going out this far. Let's do a plan B. So I think because of that, that'll help increase the volume.
Do you think lenders are being more cooperative because they're dealing with other things on their books that are worse, like office buildings that are obviously coming back constantly?
They were in 24 for sure,
yeah,
depending on who your lender is. But the question will be, how long does that happen?
Right.
How long do they go?
It's got to stop at some
right.
point.
Now, when we talk to a developer, mid-sized developer, and we ask him who his construction lender is, and he says it's a non-traditional, construction lender, as we tell them, well, you want to start communication with them now because they're really friendly now, but things could change. So I think people have to be proactive on that. If the writing's on the wall, and rates aren't going to save you in 25, and we even if we have explosive rent growth, you're still it's going to be tight. So start working on that plan because I think one thing we've noticed, and you and I've talked about this before as well. There's no easy transactions and things take longer. So if it's something that, hey, I've got to have a plan by July, and we're sitting here in February. We got to start going.
Yeah, you're late.
You're late. So that's I think that's where I think people forget that there's a process that go on, and it hasn't gotten shorter. If anything, it's gotten longer. So if there's things that have to happen, let's have those discussions. Let's start getting a roadmap down. Yeah, because you're gonna need more. You're gonna need more room for that.
At least on LinkedIn, because I don't track a lot of the sale data, it does seem like retail has really bounced back a lot more than some of the other sectors. Do you see that as retail having a competitive advantage against other sectors, or do you see that as they got destroyed so much earlier than we did with COVID and everything going on that they're more bouncing back to kind of the norm where we are? Or how do you think that compares?
If you talk to the retail brokers, like on the retail triple net, those groups, I think they had the same thing that office is going through now, kind of a whole not a repurpose, but a whole change of the retail that wasn't going to make it.
Yeah.
Over the next 5 years, I say all the time, COVID just shortened all that. So the stuff that probably wasn't going to make it in 2026, well, it didn't make it in 2022.
Right.
So it's almost like the suspect retail got washed out, and what you're left with are, retail that doesn't lend itself to, online stuff. It's the more stable. And so I think that's why you're seeing a return. If you talk to them on rates too, the interest rates have gone down on those, or cap rates have gone down, because I think the feeling is, hey, what's left is needed, and that's not going anywhere.
Right.
And it's supported. So I think that's where the big thing, as I compare it to office, it's the same thing we're looking at office. What do you do with these older office buildings? That may be, there's not a COVID thing that's going to make that decision faster, but they're going through that same thing. Is it a repurpose? Are we just left with Class A? I was reading something yesterday about everybody's getting to go to nicer office buildings now because all the Class A is that. But what do you do with these other ones? I think that kind of happened in retail where it, kind of the lower ones kind of washed out, and you're left with the kind of top of class, and so that's why it's been successful.
No, that makes a lot of sense. Well, I really appreciate your time on that.
All right, well, thank you, and we'll see you next time on Multifamily Market Watch.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is a member of Global Real Estate Advisors. Learn more at grea.com.